Good morning, afternoon or evening, ladies and gentlemen, Allincrypto here, and welcome back, guys, for what is going to be nothing short of another jam-packed daily market update. And we've got a lot of things to go through, both internally and externally, when it comes to the cryptocurrency space. And you guys will all notice, I'm sure you have your notifications switched on, that the markets pulled back yesterday. Why was this? Why is this? And does this have any bearing on the bigger trajectory or the bigger time frame plan that we have set out for not just the cryptocurrency markets, but markets more broadly? The answer, of course, is no. We still believe there's a great time ahead for markets. And there's a number of things that I think contributed to yesterday's pullback. We're going to address both of them. One, of course, is I believe you are going to look to close the gap that was made on the S&P. We've had a good week. We are going to look to, I believe, close this gap on the S&P before we see continuation to the upside. We're far more of a fan of Trumponomics than I think most people are. Most people are looking at what Trump's doing, certainly in regards to tariffs, and we had news on that yesterday, and they're looking at it with a very negative slant. Now, just to preface this, I'm a free market guy. I'm not a fan of tariffs, period, okay? But there are situations, for example, where the EU has certain tariffs on America that America doesn't have on the EU. Now, is that fair? And what Trump's essentially doing is saying we're going to issue reciprocal tariffs to countries that have tariffs on us. And I think that ultimately results, even though it introduces market uncertainty and uncertainty economically as the ramifications of these tariffs are still to be felt. Certainly inflation fears are a worry around all of that. But I think broadly what this results in my own personal opinion, you guys will let me know in the comment section what you think, it's going to result in lower tariffs across the board. Because if you're a country like Germany, for example, which is the third largest economy in the world, the US is of course the first, it's the biggest importer and second largest exporter only to China. If you're a country like Germany, you cannot enter a trade war with the United States. You will not win it. Certainly given the amount of money that Germany makes from the United States, and any kind of a skewing of that is an issue. So if you've got, let's say 25%, Germany's got 25% tariffs on America. America are now going to issue reciprocal 25% tariffs on Germany. And the news yesterday was that Trump announces 25% tariffs on any vehicles outside of the US. But if he's going to issue reciprocal tariffs, there's an incentive for Germany to lower their tariffs on the United States. And that means lower tariffs across the board. And I think that's what's going to be the resolve in all of this. But we shall see. I could be horribly and drastically wrong on that. I think people are really writing off Trumponomics already. And I don't think we've had enough time to digest that. And I think if you look at what the markets are doing in a historical context of a new presidential year following an inauguration, your markets will typically, I've done this with my Patreons, we go right the way back to 1985. Markets typically in those first few months leading into April, May, will often chop and consolidate and often sell off actually going into the second quarter of the year. And I think we're following a similar trajectory regardless of Trump's perhaps flamboyant and outlandish kind of nature. But generally, we're more of a fan of what he's doing than not. I'm not for tariffs, just to preface that. However, I think the reciprocal tariffs may end up with tariffs more or lower across the board. And I think really if you look at what plagued the markets yesterday, it was news of more tariffs. And you can see, the headlines very much dominated by this. Germany slams Trump's 25% auto tariffs as bad news for US, EU and global trade. It is, depending on how you want to go forward with that. Trump threatens far larger tariffs if EU and Canada unite to do some economic harm to the US. They will not win that war, I'm afraid. And you can see Europe may not be able to shut American firms out of multi-billion-dollar defense spending, analysts say. So there's a lot of uncertainty on the back end of this. And markets really have been, Trump took office. And then this is the effect on the markets. And actually, and I've done this, I've gone right the way back to, all the presidential cycles. There's often, just to show you an example, let's use 1989 and the new presidential election. And let's actually put this on. I haven't done this exercise with you guys. but it is a useful one because it gives a bit of historic context in regards to what we're currently going through. But if you look at inauguration periods, it's very common you get a sell-off post. We won't be able to get the inauguration period on here because the time frame isn't big enough. But you can see, let's take 2017. I'm not going to do this whole thing with you, but you get the inauguration and then you get a sell down before markets resume the broader trend. Same thing was applicable in 2013. Markets pull back. And the same thing is happening today. It really kind of normalizes what we're seeing in regards to a new presidential cycle and the uncertainty that may surround that. And we're seeing an amplification of that with, of course, Trump. I think there's a resolve to it, and that is continuation for the risk markets more broadly. I'm very bullish on what he's likely going to do with commodities, predominantly oil, which I'm currently short. We're seeing orange juice, we're seeing eggs collapse in regards to a price point of view. And I also think that there's a number of things I'm far more optimistic on than not. I think what he's going to do with interest rates, and he's following very much 2017's playbook. But that very much played the markets. On top of that, you, of course, have this gap on the S&P, which gaps often do get closed. And this was obviously caused with the good week that we've had. I think there is absolutely a possibility that you look to close this before we then see that continuation. And, of course, the cryptocurrency market, certainly Bitcoin, just along for that ride. Just throwing the Bitcoin chart on, and you can see how in step these are. Bitcoin really just a higher beta sort of risk asset play. And the altcoin sector, unfortunately, is along for that ride. But we have plenty of technical reasons, of course, fundamental reasons to be bullish on the cryptocurrency space. We are on the cusp of an entirely new financial system being formed and ran, and technology actually running that. And that's a really exciting prospect. Also, technically, we have every reason to be bullish on the cryptocurrency space. Maybe we cover that a little bit more towards the end. Let's talk now about what Congressman Begich says the US will be buying 1 million Bitcoin soon. Now, we know they're going to enact a strategic reserve. We know they're also looking at ways to create a budget neutral sort of way to add Bitcoin to the reserve. Let's listen to what Congressman has to say here.
The Act establishes the Strategic Bitcoin Reserve, a federal initiative to ensure that the United States holds a meaningful position in the most important decentralized financial network on Earth. With an eye to fiscal responsibility and innovation, the legislation outlines a plan to phase in the acquisition of up to 1 million Bitcoin, or roughly 5% of its total final supply over 5 years. Importantly, this will be done without raising taxes or increasing government debt. The Bitcoin Act is designed to be budget neutral, relying on Federal Reserve remittances, which exceeded $76 billion in 2023, gold certificate revaluations, unlocking additional capital without new spending, and updates to the Exchange Stabilization Fund. These mechanisms allow us to build a strategic reserve without burdening taxpayers, while also potentially offsetting long-term national debt.
So I think we're going to get a lot more news on that. I certainly think miners are positioned as if that's the manner, and certainly, we are expecting higher prices for Bitcoin. We do think Bitcoin's in a great place to bounce. I think there's certain altcoins out there that look, really tasty right now. S&P, by the way, has just opened. It's closed slightly down. Like I say, I do think we'll fill this gap before we see that continuation. So it's going to be very interesting to see what the US does. There was also news in regards to another accumulator of Bitcoin, and we're going to see this arms race towards Bitcoin, I believe. Even though I perhaps don't see the intrinsic value in Bitcoin, I think it's very much an emperor has no clothes situation. And the problem that you have with that is if the emperor does realize he has no clothes, it's a rush for the exit. And maybe they're planning on waiting until everyone's levered up on that to pull that and then issue in or divert people back to the system that they, being the debt systems that they kind of champion as more of a store of value backed by governments. Talking about the arms race, we've got GameStop announcing a proposed private offering of $1.3 billion of convertible senior notes. So this is very much a MicroStrategy scenario. I think MicroStrategy has nearly 500,000 Bitcoin. We're going to see this escalate, and I think that's only going to drive Bitcoin's price higher, which of course we've got technical merit for. Let's talk now a little bit about what just got announced yesterday, and that is the Wyoming, which is a state within the United States, stablecoin. And we're going to see this kind of metaverse of stablecoins. All financial institutions, states, governments, et cetera, are looking at how to facilitate crypto-enabled currencies, and a large part of that, the majority of that, is going to be run on public blockchains. And those public blockchains that essentially enable that are going to be worth, in my opinion, potentially trillions of dollars. Let's dive into this.
The Stable Token Commission has formally engaged Layer 0 as our token development and distribution partner. And we have stable tokens, Wyoming stable tokens, on several test networks already, 7 of our candidate blockchains. We'll talk a little bit more about that later. But we're incredibly excited to have support of the Layer 0 team, and we're excited to have testing underway. So with that said, Governor, we're already getting to the deep end on what Wyoming is doing in issuing tokens. Tell us a little bit more about Wyoming's tenure in the cryptocurrency, blockchain, digital asset space. Since 2016, there's been 70 bills put forth, 40 of them enacted, the majority of those under your tenure. So why did Wyoming get involved in this space to begin with?
Well, I think part of it is just the fact that we have the right ecosystem for development. It's a government that's fully accessible. We can turn on a dime. We can make things happen. And back in 2016, we had a number of people who came to some of the legislators and said, here's a new opportunity that we should look at. Can we do something with DAOs? Can we do something with what we call a speedy bank, special purpose depository institutions?
Very interesting. We are seeing literally the evolution of money right in front of our eyes. Let's talk about a company that's going to play a big role in that, of course, Ripple and the asset XRP. Ripple, a blockchain-based payment solution company, has announced a partnership with ChipperCash, a fintech firm firm focused on Africa, to enhance cross-border payment solutions. The collaboration aims to leverage Ripple's technology, specifically Ripple Payments, to facilitate faster and more cost-effective transactions into Africa using cryptocurrency. The partnership is viewed as a significant move towards improving financial inclusion and efficiencies across African markets. Various stakeholders, including Ripple and ChipperCash themselves, have expressed optimism about the potential impact on Africa evolving payment landscapes, highlighting the use of XRP as a potential Africa becomes a key region for cryptocurrency adoption. There's always been talk about a kind of pan-African currency that could be the dollar, and actually enabled by, and I think that's a very interesting concept, actually enabled by the likes of these sort of stable coin networks or financial networks. I was going to talk a little bit about the dollar. I certainly think the dollar is going to come down significantly more. That's predicted by the 2-year, in my opinion, yields in the US, and probably more importantly, the 10-year. When it comes to the crypto space, guys, you all know the drill. Bitcoin is just pulling back with the S&P. It's going to close this gap, likely bounce. You've got news that's kind of compounding that a little bit. Markets don't like uncertainty. Once there's a resolve and a wall of worry climbed, you're seeing continuation, and that's, I think, retail sentiment is really going to propel, consumer sentiment, these sort of things are really going to propel the up-and-coming rally that we're very much expecting. So that's really it from me, guys. A bit of a kind of shorter and sweeter daily market update. We like to keep you informed every single day. Interesting things happening on the kind of macroeconomic sphere or the economic sphere. Also, always interesting things happening internally with the cryptocurrency space. That's it from me, guys. I'm going to love and leave you. I'll see you all on the flip side.